All right, everyone, welcome back. So, like always, we wait for Asia to finish before we take any trades. So, before we continue, we need to understand where we're at in the market. So, what's our current range? What's the bigger range, right? Our external, our internal range, right? Where's the liquidity? Buy stops, sell stops. And what's the overall direction of bias, right? So, what we have here is from liquidity. So let's say strong high, wrong liquidity, and then price broke structure. That's strong high. You can see that we have a strong low here. So we untested. So this Asia lows are swept. So eventually it'll get swept in the future. It's untested low, so untested POI. So that's what currently price is reacting from. 1, 2. That's an order block. So we're currently here. Right? It's a big point of interest, but here's where we're at so far. It's 3 candle formation, and just below it is a wick. So we're just to here. The 4. I would check the higher time frame. Yeah, so it's a big wick, the open, then the 50%. But where's the liquidity at? So we have internal liquidity right here. And then we have pretty much the trap, the inducement right there. So we can anticipate that to happen. Okay, now don't forget internal liquidity and the inducement are two different things, as the internal liquidity is inside and the inducement are these false structure breaks. All right, so then you look for shorts here, takes you out, all right, comes to a POI, let's say, takes this out, then you're looking for shorts here again, then takes you out, all right, comes to another POI, then you're looking for longs here, takes you out. This is pretty much the inducement, another word to trap. The internal liquidity is the liquidity inside the range. All right. So delete this. That's the 3 candle formation. So that's very obvious. Got a lot of 3 candle formations. They just show you structure and it's just very obvious. So let's see what happens when Frankfurt opens. It's unswept high, unswept low. So we either go to take out the high or this low first. So that's the entire range from here to this point, this area here. And then once we get the confirmation from here. But that's a strong high, so it should hold. We have internal liquidity of the range, which all of this. Look at this internal liquidity forming. Just above, we have rejection. Check the 1 hour or even the 4 hour. Yeah. Yep, it's perfect. So we'll leave it as that. That's the POI. Take that out. It's internal liquidity. And then it prices this. Then that'll be the inducement, which is the false BOS. And then the false auto block forming here, the SMT, all of that. So let's play it out. If we take this high out, I'll look for some shorts here to target this. Yeah, so we could look at some shorts. Yeah, I don't know why TradingView is freezing up. It's been doing this lately. I have a order block. The volume is in the body. And then we have that. So let's see if we can tap it. All right, this looks nice. We'll take the risk here. We'll target this. See what happens. This is Frankfurt open. Nice. So TP hit. This is less than 105, so 104. You know, I don't take anything less than 105, but that will be your entry there. I'm sure if you went to the seconds, you would get a better entry. Okay. So I would take this, I would tap it in here. Let's wait for confirmation entry. Would I take this directly? I mean, if you don't mind having a 10 pip stop loss for 1 to 8, for sure. That's not bad at all. All right, so then remove this because we already took that. So now we broke. All right, so now we have our range confirmed. All right. So take a liquidity and broke structure. There's the range now. I already know instantly this is a weak low. All right, now remember again, you have to know where this is coming from on the higher time frames. All right. So I already know that that's a weak low, so that will get taken. And then we got equal lows right here forming. So that's London open now. So I took this high out. Tapping into I'm going to get a wick. So we can expect some type of reaction, which we are already starting getting that. As you can see. All right. Should move all this stuff in the way. So now we swept a major point, the Asia high. We're definitely gonna get a reaction from this untested strong high. This is gonna cause a pullback. So remember, these obstacles that are in the way of the overall bias are the reason these pullbacks occur. Notice, okay, look, notice this. This is very important. All right. Let me just remove this real quick. We took out an external range point. We reacted off of a 1 hour, I believe, 15-minute or 1 hour. Yeah, 1 hour, 15-minute. I'm going to get a wick. What the price do? Made a reaction, right? Which was what? In other words, the pullback. Cost the pullback to go long, then take out the liquidity up here, equal highs, the buy stops. All right. Then you exit the long, then you go short right there. See that? But like I mentioned before, we see these trades and these setups, but is it worth taking the risk? And these are going for a 1 to 2 to a 1 to 3. I'm not going to take them. But regardless, I'm showing you guys how this is happening and how it all works. Take out stops, retracement, long. Take out stops, POI, retracement. Right. So now we took out a major point, so we can expect a much longer pullback. All right. So I hope it's all making sense. Right. There's always a logical reason, okay? So we could catch a short. See what we get. So I'm gonna put this trade back, the one I took. Where was it at? think it was somewhere here, right? It was somewhere here. Let me just put it back like that. So check this out. Okay. Again, let's go into this. Let's dissect this. Look what happened. Check out stops, POI, close POI to liquidity. The institutions are going to make a stop hunt. In other words, a manipulation, and it's going to be quick and fast. Okay. So took them out, push it back down. Why do you think they push back down? To take out the stop losses that they have down here. Push back down, long, short, long, short, long, let's say. And it's going to keep on going. Now, I was anticipating a price to push down from here, a deeper retracement, but I'm probably missing something as I do see a strong high right here with obviously liquidity just below it. So this might be the area where price might stop. Let me go to higher time frames. I haven't gone to higher time frames because I don't want TradingView to show what's going to happen because it does that. So that's why I haven't gone to higher time frames. But I say untested QM, what's just below? Again, we took out stops. What's next? A retracement. You see how it repeats over and over again. We're just hunting stop losses. Okay, again, there's the pullback for another long. Now, I didn't get that long retracement to the downside that I was anticipating, and that's fine. That's why I was anticipating it, right? For price to do that. Now, I didn't take any longs here. As for me, it's not high probable. It was like a 1 or 2, 1 or 3. Maybe a 1 or 1 short, 1 or 2 shorts. And for longs, I wasn't gonna take it because this is a major POI area. This is a high probable area that I would like price to come into. I'd rather wait for this to happen, take the shorts here. But there's nothing wrong with taking the longs here, as long as you know your overall internal target. Because every strong low should be protected, right? So I didn't take them though. That's fine. This is the one that I'm very focused on right now. That's the one I want. So, and then I missed the one down here too, didn't I? Or didn't give anything? Or I did give something. Oh, I did. Yeah, I did. Broke structure, BOS, right there. The liquidity build up, trend liquidity, unmitigated POI, long to the upside. So that would have been the long right there. All right. Again, this is not for me. This is for you guys. This is me showing you guys how to catch these entries and how to catch them. Even if I don't put my risk reward tool on this, it does not mean it's not a valid trade or a valid entry. Okay. This is to help you guys see and understand these moves in the market. All right. But that's how what took that long. That's how it took this short here. You guys saw, and then you could have stacked trades in here on these strong lows. Notice the same patterns repeat over and over again. Break it down. Let me show you guys. And then take a look, like I mentioned, I was really waiting for a retracement here off of this area, a big one actually. As we took out this major structure point, I was anticipating this to happen and then come into these levels and then continue going. But that didn't happen, right? I'm not always right. We are not going to always be right. And that's what I'm trying to pretty much preach is that we're not going to always be right. We're not going to always have the right bias, okay? And that we take losses and that we miss trades or, you know, in other words, we're not perfect because we're humans, right? We're traders and we're here to just take high probable setups and whatnot. But we can always look into what's happening and understand pretty much the reasoning behind it, right? So if I was saying I'm not looking for no retracement here, but I'm aiming to take out this point here, then I would have just stacked trades. But right now, as I'm recording this video, in my mind, I was anticipating a retracement. Okay. Now, this is very important to understand that right now, let's say I'm trader type one. I'm anticipating a retracement from that area. Okay. But trader type two, let's say that I wasn't, and I was just gonna stack trades until we hit this area here. All right. It doesn't mean that I'm right or that I'm wrong. It's just that in that moment, that day, at that hour, at that minute, I was anticipating a retracement, a deep retracement. But trader number two, he was saying, no, I'm going to keep on stacking until it comes here. All right. At the end of the day, our overall bias is this target, right? But we're not going to know exactly if we're going to get a deep retracement or a short retracement. Okay. But eventually you will get that intuition, that feeling with experience. You know, and I've seen this happen a lot. So that's the reason, based on my experience, I've seen that once we take out a major point, we get a deep retracement. So I was expecting that. And that's based off of my experience. Maybe your experience may be that you don't always see those deep retracements. So you're just going to stack trades and be confident stacking trades. But at the end of the day, the bias was right. And that's what matters. All right. So you guys saw how you could have taken those, the short, and then how you could have taken the long from here. All right. Because that's the whole point of this video, is for you to understand. So now we're going to take out this high. All right, it's taken. We're coming into New York. So let's play out to New York. New York kill zone. All right, so let's start. So let's see what we have here. 3 candle formation, PUI. What can we expect? What can we expect from here? A retracement. The market's fractal. So let's see if we get that. Okay, we didn't get it. Well, we did get it, but on a very, very small scale. And we drop down to 1 minute. You will see it actually here. Breaker, retracement. There it is, right? Well, again, I'm not focused on the longs, as the longs here would be very, very low probable. You're already in premium, right? You're not in discount anymore. So you're looking for shorts. We're in a higher time frame POI. So what's a high probable scenario, right? That's why I say you may see these trade setups, but not every trade setup is worth taking. Okay. So we have the breaker structure here. So we finally broke. Perfect. And now we should see the Q inform and we should drop. If the overall bias is correct, complete the range cycle. All right. So it looks like we just broke out this low, so and we don't get a reaction point to the upside because we need a retracement. This can just keep on dropping, tanking, and I wouldn't be surprised. Okay, so that's strong low, so we can expect a reaction from here. That's a pullback. Okay, now remember the range cycle is complete, and we are anticipating a long from here. Is this high probable or low probable? is low probable as we are going against the trend or counter trending, right? But you're willing to take the risk. If you get that QM, then we take the trade. It meets the rules, so we take it. All right, came in. Very impulsive move to the upside. Okay, so price broke structure. And I want you to look closely. We have a 3 candle formation here, which is it's a swing point high. So that's a high. It's price broke structure, retraced, took out liquidity, broke structure here. So that's a strong high. So that's the current range is this one to this one. So this is your current range. After a BOS, a new range is created. So this range here came in to fulfill A to B. So now we're dealing inside this range. So now we have enough data to make a move. So I'm not gonna sit here and wait for price to come all the way up here. Again, this unmitigated PY, this strong low or untested QM, let's say, is currently a strong low because it hasn't been tested, right? But we know that the overall move for the bigger picture is a weak low. Okay. So this is the cost of this retracement. All right, so we're gonna come into this point of interest and we can look for a short in here. So we have a rejection block. Let me just remove this. We have we're taking now stops. And then we have internal liquidity right here. I take a short from here. That's the breaker. It's a 9 pip stop loss. Yeah, so we're going to refine this down to the break, which obviously lines up with this. So we'll take a short here. So that's the internal liquidity. That's the breaker, which lines up with this block. So we'll just do it here. This small final decision, taking the trade here, taking the risk. What happens? Once we break this low, I'm going to break even. Nice. All right. So break even. This is already 1 to 5, so I'll be done for the day. This is a very nice trade. So a 15-minute rejection block, 5-minute imbalance fill price action, which is a 1-minute breaker, which lines up with this order block, which is the closest POI to this. So we had a lot of confluences. Remember, an order block is a price level or key level. So this all lines up with that area. Don't overcomplicate it. Okay. So then this should hold because strong high, strong high, strong high, obviously. We got the right leg, the right push, then every strong high should be protected. So this should now hold. And don't see price going up higher. It should now go. My overall target is the external of this range. So I'm gonna target this. That's a 1 to 7. Nice. Let's remove this. Oh, nice. Broke structure. And it just melted. Awesome. And then obviously your final target would have been this bigger range that we just hit. All right. So we had this, and then we had this. bigger range. So this would have been a total of also a low that a Asia low that was never taken. Total of like 9R, but this would have been my actual target because that's the target of this current range. So 7R. So no actual trade here that I saw, but we can go back and see why it happened. Because the whole goal is to gather data to understand why this happened or why something happened. So yeah, I mean that's a strong high. There's the liquidity here. There's a QM here to here, break a structure. So strong high, build up liquidity, QM, short. But this doesn't look clean to me, so I would have probably not taken that at all, to be honest. I would have waited most likely for this to get taken, didn't drop. And again, I didn't take these. I mean, I kind of wish I would have. It would have been a insane session if I took all these. But I was really waiting for it to give me some type of retracement. And that's okay, right? That's just based on my experience. I see that happen a lot. So, but again, what matters is that we stick to our rules and what we see and not what we think and what we personally believe in, right? But yeah, I mean these would have been sick trades. And also you guys seen that on my previous sessions, I take trades like this. So you guys know that it's valid and that we can. But remember, there's a certain time where price will come to a certain area where these trades become very low probable, right? So if you're in already up here past equilibrium, you know, these are very low probable buys. You can take them, you can, but they're very low probable because you're already in premium. All right. The ones you take down here are the best ones, but these are very low probable. Awesome. So the range cycle is complete. So we took two trades. We took the one here and the one here. That was like around, don't really remember. Auto block right there. I don't know, around here. What's back? Yeah, I think it was around like a 4 of 3R. And then this one, 7R, you know, just estimate. Then, you know, plus the fees and spreads and what, you know, whatnot from your broker. But yeah, these are the only two trades that I actually took that I put the risk reward 2 on. However, we went over how that one could have been taken, these, right? And then, yeah, that's pretty much it. Awesome. So I hope this made sense, guys. I hope this breakdown made sense. And that's it for now. On to the next one.